Edge ever closer to our impending fiscal doom. We're going to look more closely at just how the markets are reacting and what is yet to come. Well, joining us now, we have Michael Farr, president of Farr Miller in Washington and also a CNBC contributor, and also Peter Schiff, CEO of Euro Pacific Capital. To both of you, great to have you on the show today. Thank you very much for coming back from various holidays. Michael, you know, this is not an economic crisis. This is not a market crisis. This feels like a political crisis. Do you blame our leaders for just failing to get their act together over this?
Mandy, it is a profound failure of leadership, once again, from Washington. I mean, we have been facing this profligate spending for a long time. Over the last 4 years, it's been $5 trillion more than we've brought in receipts. So just think about that in terms of your own household. If you spent, good 10 or 11%, 12% more than you brought in your annual receipts. It doesn't work long term. So we keep that up, and we knew it was coming, and we don't really have the receipts, so we're trying to find some balance somewhere, and yet these guys go right up to the wire. John Harwood has been reporting all day that they have to issue Congress a 48-hour notice to return to Washington. Hasn't gone out yet. So while we're having a 5-day countdown, it's probably closer to 3 days because we still have that 48-hour period we have to erode into. So this political failure could turn into economic crisis depending on how severely these particular fiscal cliff and sequestration issues hit the markets. CBO says could be as much as negative 5% in GDP.
That's quite a lot. Peter, do you agree that there could be financial or market Armageddon, or maybe not? Maybe things will be okay?
Well, eventually it is going to be an Armageddon, but not because we go over the cliff, but because we avoid it. Avoiding the cliff is the real problem because it means that we delay paying for all this government. Look, big government is very expensive. The fiscal cliff is part of the problem. We can't keep borrowing, and the Fed can't keep printing money. If we want government, we have to pay for it. That means we have to have higher taxes. I would rather see a much bigger fiscal cliff in the way of government spending cuts. That's what we really need. But if we're not going to do that, if we're not going to cut spending, then the middle class has to brace for the bad news. They have to pay for all this government, and the best way to do it is with taxes. And unfortunately, taxes on the rich are not going to work. They're already overtaxed. It's the middle class that's going to have to pay more if we want all this government.
Do you think they can, Peter, without destroying the economy? Because the question I asked extensively last week is, why is a couple $100 tax rise in the middle class a doom now, but during the Clinton era, it was praised?
Well, people don't have the home equity they had back then, and they don't have the stock market wealth they had back then.
And costs have gone up, right?
Yeah, and look, inflation is the inflation is look at how much gas costs now compared to what it cost back then. Food is a lot more expensive. Look, the economy is buckling under the weight of all this government. No, I don't think Americans can afford it. That's why we have to slash government spending. The nation is broke.
But Michael Farr, while we need this reduction in spending, and I'm totally with you, we don't need this ham-handed, blunt instrument approach to figuring out the solutions to these problems. I mean, these guys have had all the time in the world to come up with the Simpson Bowls, and they just refuse to take responsible action.
But they're not going to do that. It's funny. People talk about we need a solution that avoids the fiscal cliff, but that solves our long-term problems. These things are mutually exclusive. We can't solve our problems without going over a cliff. And the problem is the cliff is too small to actually solve the problem. It needs to be much bigger.
How much confidence, Michael, how much confidence would, let's say we go over the cliff and we cut spending, we raise taxes, and the fiscal situation, albeit through a short recession, helps the fiscal long-term situation of America? How much confidence could that add to many people out there that are worried about the long-term health of this country?
I mean, you're talking about Valhalla. I mean, nothing would be, that's the rosiest and most fabulous of all scenarios, if, in fact, we could get to that, Brian. But, Brian, you have to remember, I sit here in Washington, D.C., and, of course, the line, of course, on Squawk Box this morning was lawmakers are much more inclined to say, I was there to lower your taxes, and I didn't vote to raise your taxes. Yeah. And as sort of simplistic pablum as that is, I think it's true, and so I think they let us go over, and then they cut the taxes, and they undo all the good the cliff could actually do.
But there's no real spending cuts. That's part of the problem. It's all talk. There's no real cuts in the cliff.
You guys sound like Congress. Keep on arguing behind the scenes. Enjoy yourselves. Okay, thank you so much, Michael.